Welcome back. This is the final part of this topic. Earlier, we've outlined the grand context for the weakening trust in US dollar assets and the resurgence of gold. You might be wondering, with gold prices already so high, how can a savvy investor enter the market at this high point simply by picking up cigarette butts? So, how can one participate in this bonanza? Are there still untapped value gaps in the market? The answer is yes. When the price of gold itself has already reflected most of the positive factors, the true excess returns often lie in the companies that extract gold and silver from deep within the earth, mining stocks. Mining stocks often significantly outperform spot prices. For example, the Gold Mining ETF, GDX, has risen approximately 55% so far this year, while the Gold Spot ETF, GLD, has only risen about 26%. Finding these value gaps in mining stocks is a worthwhile endeavor. Today, we'll become treasure hunters and learn how to find those gold mines and silver mines with true explosive growth potential amidst seemingly high asset prices. First, we need to understand a core concept: mining stocks have a natural leverage effect relative to precious metals themselves. What does this mean? Imagine a gold mining company with a fixed mining cost of, say, $1,500 per ounce. When the gold price is $2,000, its profit per ounce is $500. But if the gold price rises 50% to $3,000, its mining cost remains essentially the same, but its profit rises to $1,500, a tripling. This is profit leverage. Historical data perfectly demonstrates this. During the precious metals bull run that followed the tech bubble from 2000 to 2008, the Nasdaq fell 27%, while the XAU index, representing gold and silver mining companies, bucked the trend and soared an astonishing 393%. When capital flees a burst bubble, it pours into precious metals, and mining stocks become the fastest-running, thousand-mile horses in this capital migration. However, investing in mining stocks is much more complex and risky than directly purchasing gold and silver bars. Like a seasoned geologist, we must carefully explore and discern authenticity. Today, we'll explore a simple yet effective stock selection framework through two real-world company case studies. One embodies the grand narrative of American Renaissance, while the other exemplifies the unique value of pure scarcity. The first story is about resurgence. In South Dakota, there's a legendary stretch of land called the Homestake District. Over the past 140 years, it has produced over 40 million ounces of gold, a living fossil of American gold history. However, in 2002, when the gold price bottomed out at $250 an ounce, mining became unprofitable. Coupled with burdensome regulations, this rich mining area was abandoned for nearly 2 decades. Now, with gold prices soaring to over $3,000 and the U.S. regulatory environment improving, a company called Dakota Gold, stock symbol DC, is working to awaken this slumbering lion. This story itself perfectly aligns with the grand themes of repatriating manufacturing to the United States and resource independence, the American birthright. But a good story needs a great protagonist. The founder of Dakota Gold is a mining legend, Bob Quartermain. He built a company with a market capitalization of just $2 million into a $2 billion industry giant. In the high-risk world of mining investment, the management team's track record and capabilities are paramount in determining success or failure. Investing in Dakota Gold is, to a large extent, an investment in Quartermain and his team. There's no such thing as a free lunch, and such investments certainly have their risks. Dakota Gold is still in the exploration and development phase, with full production not expected until 2029. This means that its current share price doesn't fully reflect its future output. This is an option-style investment in future potential, with relatively high risk, but potentially enormous returns if successful. Therefore, Dakota Gold provides us with the first dimension for stock selection, seeking revivalist companies with top-tier management teams, world-class assets, and aligned with macro-geopolitical trends. The second story is about purity. In the world of precious metals, the investment logic of silver is both similar and different from that of gold. Silver is not only a monetary metal but also the indispensable lifeblood of modern industry, particularly green energy and artificial intelligence. And Aya Gold and Silver, AYASF, the company we're discussing today, is an excellent example of capturing silver's unique value. Despite its name, it's actually one of the purest silver companies you'll find. Why? Because many so-called silver miners actually derive the majority of their revenue from gold. Aya Gold and Silver's Gounder mine in Morocco, however, produces almost exclusively silver. This purity creates significant price leverage. Aya's cash cost of mining an ounce of silver is less than $20, and with the current silver price around $38, the profit margin is already substantial. Now, imagine if silver prices soared to the $100 level many predict, driven by a surge in both industrial and investment demand. How would Aya's profits change dramatically? Furthermore, the jurisdiction of operation is crucial. Aya's mines are located in Morocco, where drilling costs per meter are approximately $145, compared to $600 in the United States. This significant cost advantage translates directly into the company's profits and competitiveness. Unlike Dakota Gold, Aya is already in the production ramp-up phase. This means its risk is lower than that of pure exploration companies, but it is also actively exploring new deposits, retaining significant growth potential. Thus, Aya offers a second dimension to stock selection, identifying leveraged companies that demonstrate purity in a specific metal sector, maintain low operating costs, and are therefore well-positioned to maximize the benefits of rising metal prices. After hearing these two stories, we can develop a treasure map that even ordinary investors can use, a simple 4P framework to help you screen mining stocks. First, people. Who is at the helm? Does the company's management have a proven track record of success? Are they industry legends or just newcomers? Remember, in mining, people come first. Second, location. Where is the mine located? Is the country or region politically stable and mining friendly? Are operating costs competitive? Third, purity. How much exposure does the company have to the metal you're interested in? Is it a pure company or one with a mixed bag of assets? The higher the purity, the greater the leverage. Fourth, stage. What stage of development is the company in? Is it an early-stage exploration company, high risk, high return, an established producer, more stable, but potentially limited growth potential, or one in the sweet spot of ramping up production like Aya Gold and Silver? Friends, today we've discussed the twilight of the dollar and the dawn of gold. Finally, we'll delve beneath the Earth's crust to find investment opportunities that can multiply the potential of this bull market. Buying gold and silver bars directly is the sturdiest ballast of your assets, ensuring they won't capsize in any storm. Investing in high-quality mining stocks is like equipping your ark of wealth with a powerful engine, allowing you to sail at breakneck speed when the wind is favorable. Of course, high returns always come with high risks. Investing in individual stocks requires more time and effort to research. But as we've analyzed today, with a clear framework focused on the four core elements of people, land, purity, and class, you're fully capable of finding your own gold and silver in this mine of opportunity. The perfect storm triggered by the restructuring of the monetary system has arrived. While most people are still lost in the old dreams of mainstream assets, a few who are awake have already begun to act. I hope today's sharing provides you with a clear navigational chart, helping you navigate this historic wealth migration and set sail. The above is just some information and personal perspective I'm sharing with you today. It's not investment advice, so please don't blindly follow it. Thank you for your company.